Anyways, let's go on. This week in trading history, what do you got for us, Patrick? Oh, by the way, just before we go any further, Patrick, I missed you last week, and it was never more obvious than when I stumbled through this week in trading history.
Didn't you say trillion instead of a billion by accident?
You know what? You have to work the slides. You have to try to work things. It's just like your job's harder than it looks. Like I kind of thought, it's Patrick. How tough can it be? But when you're not there, it's like all of a sudden, like I'm thinking about a million things. I got to keep the show going. It's hard. So. Yeah. I have to give you credit for this.
So hard.
And but thank God Cuppy saved me. He had a good story to take me out of my
misery,
terrible thing. And you know what the funniest part about it is when
spiral.
you said, like, how bad could it have been when I told you how bad I did? And he said, like, you said, all you have to do is read Wikipedia. So why don't you do your job at reading Wikipedia for everybody?
I am not reading off of Wikipedia, but you should have. That would have helped you out in a big way last week.
Okay.
All right. So this week in trading history, I wanted to go back to November 1st, 1999. Look, we could talk about bear markets and other things like that. And there's no shortage of analysts that are trying to say that there's a lot of similarities or echoes to 99 to present, like particularly the way that the recession played out in 2001. But anyway, that's not what this history is about. It was on November 1st of 1999 when the Dow Jones Company, who puts together the Dow Jones Industrial Index, rejiggled their asset mix in terms of what composes of the 30 companies that make up the industrial index. And back then, they added the technology components to give the industrial index a facelift for what is the new paradigm. And they added Microsoft, which was one of the darlings during the 99 in the run. They added Intel, which was certainly a massive darling. They added SBC Communications, which later rebranded as AT&T because that was their parent company, and they just kind of changed up the name a bit. And they added Home Depot. And at the same time, they dropped legacy industrials, right? Like Sears Roebuck was on the Dow for 75 consecutive years. Union Carbide, which was dropped, was 71 years on the index. Chevron and Goodyear both were on the index for 69 years. So you're talking about core industrial companies that were on that index, and they were intentionally dropped to put the tech companies on. And would you not know it that the Dow Jones, within months, marked its peak and began wiping out like 40% of its value in the subsequent 2 years?
It's as old as time, Patrick.
Yeah.
It's
like a magazine cover. It's like a magazine cover.
It's like when it finally goes into the index, you should be selling it.
Yeah.
That's the kind of, especially this one where this is actually based, the Dow Jones is chosen by humans as opposed to by a calculation. Like the S&P is actually just market cap and whatever it is that, when it gets a certain market cap, it gets audited automatically. The Dow Jones is humans' choice about what they think best represents the market. Yes. And the fact that they were doing this at the top is just...
it's epic.
It's a beauty. It's a beauty. Like that's
it is a testament to doing the reverse because like the moment think of the pressure that was on that team of people that they're seeing all of these stocks running, right? Like during that run, we're going to talk about it in future history sessions when like Nortel and BCE were like 30% of the index and all these other things, the Canadian index. They were just, it was just a period where if you didn't own these stocks, you didn't have performance. And the pressure on the team that decides what goes into this mix, it was just enormous because the industrials would be lagging in a big way because they simply didn't have the exposure to the stocks that were running, right?
Right.
And so the pressure on them to include them, there's a breaking point, which is that it's the WeWork moment, right? It's like,
yeah. You know what's interesting? It probably was also coincided with the time that Stanley Druckenmiller, chased the tech stocks in the final kind of throes of that .com bubble.
Right. Well, what is interesting here, and it's not evident on this chart we're showing of Dow Jones, is actually from November to I think it was March of 2000 was when the Nasdaq went from 3,000 to 5,000. Right.
Yeah,
Like,
it was just epic. It was nuts. It was doubling every day.
The S&P and the Dow did not participate. It was a Nasdaq only run, and during those 4 months, the Nasdaq, freaking 3,000 to 5,000 in 4 months.
And that's the famous Jim Rogers. I think it's Jim Rogers line, or at least that Jim Rogers talks about in Market Wizards. The fact that often the last kind of 50% of the move in the bull market occurs in the last 10 or 5% of time.
Right.
Meaning that it accelerates at the end.
And
that's interesting. Like, that's back to the idea that maybe, in our current environment, maybe things get even stupider before they finally kind of reach the point of...
Martin Armstrong keeps talking about that, Armstrong economics. Like, he was always of the opinion that, like, the Dow would rip to 40,000 and some parabolic blow off that would end it all. And we've made fun of, well, that was Harry Dent.
Oh, was it Harry Dent? That's right. I'm sorry.
Yeah, but it's all the same narrative, right?
Yeah.
Which is that it's that fifth wave of the kind of Elliott wave count, the parabolic blow off that happens at the tail end. But it's interesting is that back in '99, it was only a component of the stock market that did that. And it wasn't the S&P and Dow that blew off. It was just the Nasdaq. And this is the same thing. Is like, if you think it's the Dow Jones Industrial that'll blow off, it may not be. It may be derivative markets within.
Yeah, it might not even be a listed market. It might be private equity.
Yeah,
like,
you know
like,
you are absolutely right. Private equity. You sent me that video that was just anyway. It's
they can't say that. You have to tell everyone the video I sent you. I sent you the Compound, which is Barry Ritholtz and Josh Brown's thing, and they interviewed the guy from Verdad. And you know what?
Yeah.
We'll put it in the show notes, and it's a terrific 15 minutes of that you got to watch because it's just
shitting on private equity.
Well,
awesome.
Yeah, we got to. Patrick's like, how do I short private equity? That's all he said after seeing it. He's like, how do I short this? Okay, well, anyways, that's a great market history. Thanks for sharing that with us today, Patrick.